Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
It's kind of a slow week as we get into things news-wise, so we're going to talk a little bit about markets. To get things off, let's recap what happened in the markets this week.
Yeah, so we'll start on the cattle side of the equation since we have some good news in terms of cash cattle prices for the week. We'll call fed cattle cash up $8 to $10 for the week. If you look at the feeder cattle side of the market, it's also been stronger this week, steady to $8 higher. There's continues to be pretty strong demand for calves going into the feed yard. So it's been a good week in the cash cattle side. If you look at futures markets, the recent live cattle futures up $5 for the week. If you look at recent feeder cattle futures up about $4 for the week. So both futures and cash moving higher, but we did get some narrowing between cash and futures as we went through this week. The choice beef cutout value also higher, so we're starting to move seasonally higher. It's up $5.30 for the week. That the Friday close that we got today was the highest since July 17th of this year. It's nice to start to see some seasonal moves higher. We've really been driven by both higher rib and higher loin prices. We had rib prices up over $17 for the week, so pretty strong on the beef side of the equation. If we look at hog markets for the other side, I'll say cash hogs were relatively flat for the week, maybe a little bit of firmness, but only 25 or 30 cents higher relative to where we ended Friday. Lean hog futures were up about 75 cents for the week on the most current contract. Yet when we look at the pork cutout value, so up $1.93 for the week, we did see stronger belly prices for a change. So bellies up $6.95 for the week, up Thursday to Thursday about $12.50. So some nice strength on bellies that I think has been helpful when we look at that pork cutout value.
It's really interesting to watch the cattle side of things. It seems like cash prices might be having some influence on futures prices, and the same back and forth as we look at the strength on both sides of that.
Yeah, absolutely. I think when you look at futures traders, number one, they're saying, boy, there's a lot of cattle out there. And that continues to try to push prices down over time. Yet when you look at what's been happening on the demand side, demand seems to be stronger than what we're really seeing with these large runs, and it keeps pulling prices higher. So when you think about these higher choice beef cutout values, for example, it just goes to show you that it is both sides of the equation that matters. And right now, it seems to me demand's winning that tug of war on price.
Making me a little nervous about my bacon prices at the grocery store, though, to see that big jump from week to week. And I would only assume as the holidays get closer and we see bacon featured in more ways than one, that demand and that strength is only going to continue.
Yeah, it sure seems like it. I mean, we continue to find just overall meat demand, and you take a product like bacon where the demand has just really been quite stellar when you look back at 2017. And as long as that continues into 2018, you may pay more for that bacon you like so much, Megan, in the store for much of 2018 as well. We'll wait and see.
As we get into a couple of reports this week, let's start first and talk about Restaurant Performance Index. We're going to talk a lot about demand today and supply and how maybe those relationships. Restaurant Performance Index, any surprises as we look at September?
So I don't think we got a lot of surprises out of the September data that we got. The overall Restaurant Performance Index showed a tick up of 0.7%, which is a little stronger than the August number, which was only up 0.2%. So a little stronger growth in that overall index. We're going to have to continue to pay attention now to the components of that overall index. The expectations index was up 1.6% in the September numbers and really drove much of the overall gains in that Restaurant Performance Index. The current situation actually ticked 0.1% lower, and that has a lot to do with a number of stores reporting customer traffic down a little bit when you look at the month of September. So don't want to be too negative about that, but the kinds of Restaurant Performance Index numbers we were seeing when we started 2017, those have certainly continued to slow. And you look at that current situation index, and now we've got 3 months in a row where we've been moving lower. I hope that's not the start of a trend, as that might dampen that demand we just talked about.
That that was my question was, is this, are we looking at the start of more of a negative trend with 3 months in a row of decline, 3 consecutive months in a row of declines?
Yeah, so I'm not certain that we have anything that we want to be too worried about at this point. If you remember the September numbers as well, a lot of restaurants that were affected by hurricanes in Texas and Florida certainly had some issues, and I think that might have had some influence in these numbers as well. So don't want to cause too much of a negative trend at this point, but hopefully we'll bounce back when we see some October numbers here in another month.
Scott, as we talk about numbers, jobs report came out today, and really some positive numbers, especially as we dig deeper into those and take a look at that unemployment rate. Yeah,
absolutely, Megan. When you look at the jobs report we got out for October, we added 261,000 jobs here in the United States in October. That's really a nice bounce back after the September numbers that we knew were influenced by the hurricanes in Texas and Florida, but not really certain of those overall effects. So a nice growth in October is good. I think we actually got some revision in those numbers for September that actually even showed September up slightly in terms of job creation. So all in all, good news on that front. When you look at the unemployment rate, now sitting at 4.1%, it's been about 17 years ago since we can talk about an unemployment rate that low. And so, I guess I really want to tie that back to what I think's been happening on the meat demand side. If you look at those jobs that we've been creating, I think we're creating jobs for those that will likely use those additional dollars from those new jobs much more for meat demand. I think when you look at some of the early growth that was very much in the high wage earner brackets, and now we're getting a lot more folks that are participating in the economic growth that we have. So I think that's really helpful for meat demand, because it's the folks that, again, when you put another dollar in their pocket, maybe a larger proportion of that goes for meat.
As we talk about demand and we take a look at support for beef and the support for both beef and pork demand, we look at the wholesale values to kind of break that down a little bit, and those continue to show strength, and that's got to be helping on all ends.
Yeah, absolutely. So, it's not just retail demand that seems to be strong. When you look at both demand for cattle and demand for hogs as well, I think those demands equally have shown strength as we've gone through 2017, and frankly, more strength than we would have anticipated. Certainly on the hog side, we knew the additional processing capacity would likely create more demand for hogs, but I think even relative to what we would have thought, it's been even stronger, perhaps.
Speaking of demand, I know we're looking at continued increased slaughter runs the next 4 to 6 weeks. They're anticipating those to continue to rise. How much is the increased slaughter capacity playing into that to really help us kind of make it through this really large seasonally high run?
Yeah, so we're seeing good signs that additional processing capacity, I think, has been helpful when you look at the hog side of the equation. Peg Saturday kill last weekend at about 200,000 head. That's down 30% relative to the same week a year ago. And I think if you look at the last 3 weeks, we've been running roughly that same percentage below a year ago levels. So able to process more during the week. Those lower Saturday kills, all else equal, I think keeps demand for hogs higher than otherwise would be, and keeps hog prices higher. So we are seeing signs that that capacity is being helpful. And I just remind us that we're likely in for another 8 to 10% growth in processing capacity as we go through 2018 and 2019. So that isn't going to change in terms of that demand for hogs for the next several months.
But we're not seeing that on the same that type of similar instance on the beef side of things. So do we get concerned about, we've talked about the beef herd. What happens if we get close to slaughter capacity or have slaughter capacity issues like we have in recent years on the pork side?
Yeah, so, I don't want to suggest that we're in for a dire situation when we look at the cattle side of the market, but it is important to understand that we're going to continue to be talking about more cattle coming to market for several months in a row. And I say several months, more than a year. And we do have to be worried when you look back a few years ago, and I'll even go back to closing feed yards and closing packing plants. You know, we're going to want those plants and we're going to want those feed yards back here as we go forward into 2018 and 2019. It just should remind us that the pressure on margins is going to be different than what we see on the pork side of the equation, where we got a big demand for hogs to fill that processing capacity. We're not going to have the same amount of slack, I think, going on in the cattle side. And we want to make sure we're paying attention, and we'll wait and see. It could get tighter on the beef side, but I think we have a little more flexibility still left in the cattle side of processing.
Scott, anything else this week?
I think we've covered the major topics for the week, Megan.
As we take a look to next week, what reports are we looking out for?
Yes, we're going to get another shot of monthly trade data, which is going to be really important to see what's happening on the international side on Monday. USDA will release their monthly WASDE on Thursday, and then we'll get another shot of consumer information on Friday with the release of the Consumer Confidence Index.
Well, we look forward to seeing you next Friday and having those conversations. Have a great weekend.
You do the same, Megan.
Thanks. To have our weekly livestock market update delivered to your email box every Saturday. Visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.